Where's the oh sheet? What did I do? What's up, everybody? What's up, T? Happy holidays. Happy New Year. Hold on, I just kicked this thing in reverse. What did I do? Oh, here we go. We'll keep it short and sweet. Been a quiet week. Actually, for being that it's a quiet week, right? It's kind of an expected quiet week. The option market's never that quiet anymore. It used to be summer Fridays, holiday weeks. Um, I mean, I remember there were portions throughout the day where I couldn't, like, it's tough to keep your eyes open. That's how quiet it would be. That doesn't exist anymore. Especially these days with weeklies and zero DTE so popular. It's become a video game and DraftKings site. So anyway, today was a quiet day overall, but you had a little bit of stock picking. You had some unusual activity out there. We could talk briefly. We'll talk about a few names, especially the more recent names that have seen decent order flow, and we can watch going into the new year. Let me see. Did I post this thing here? So, okay, good. All right, so let's quickly just touch on the overall market. Again, I know a lot of you are in the room, and a lot of you attend the morning, the live webinar we do. So we kind of touch on a lot of this on a day-to-day basis and go over it pretty thoroughly in the steam room. But this is a full-fledged liquidity-driven rally. Again, whatever other label you want to put on it, choose your poison. But undoubtedly, this has been a liquidity-driven rally, right? And we talked about this morning, and I think a little bit earlier in the week. You got to try to understand the frame of mind from investors, funds, money managers out there. The way they're looking at things, right, with the quote-unquote Fed pivot, and a surprising pivot at that, right? It sort of confirmed that you're at a point, right? Because this was the confusion we were at, not just heading into 2024, but a good portion of the second half of the year here, behind the recent correction as well. We're at a point where growth has slowed economically, right? It's tough to find that explosive growth out there. The economy has been resilient, but at the same time, very few pockets of growth, okay? And when the money does find growth out there, right, we look at companies with explosive fundamentals, explosive growth on the earnings side, all their stocks pretty much look the same, up and to the right, all right? So wherever there is growth, money has tended to crowd into those areas because there's not a lot of it, okay? But now you're at a point, and this is why I think we've seen breadth broaden out, and kind of the mega cap, the Magnificent Seven stocks kind of lag here, right? Something we spoke about ad nauseum over the last couple of months. We needed to see that. But the reason why I think is pretty simple. If you do have an economy that slows into the first half of next year, okay, and slows dramatically, I think the Fed already kind of confirmed to us that they got the markets back again, right? Against what everybody has said continuously over the last couple of years that this time is different. This is a different Fed, Powell, you got inflation, blah, blah, blah. Now, inflation has cooled, okay? And that's kind of what Powell has to lean on here, okay? And another big factor is the election year. Okay, they don't want to get in the middle of that. They don't want to be the reason why Biden takes an L, right? So Powell kind of confirmed to us, surprisingly, this early that if the economy doesn't deteriorate, the Fed's got the markets back again, right? And even more so, and I think this is what got people really excited, that even if the economy doesn't deteriorate dramatically, if inflation continues on this path, the Fed has been talking about cutting rates. They admitted that's been a discussion, right? And prior to that, the logic, especially amongst a lot of us, was that unless the wheels come off the economy, unless it gets really bad out there, Powell doesn't have really any incentive, right, to cut rates. And now, obviously, the markets learned something different. And that's what I think you're seeing now in the equities. You're seeing even the crap of the crap catch a bid, the banks, the heavily shorted names that were going bankrupt without the Fed's back, right? Without the Fed getting involved, you had names like Affirm, Upstart, you name it. These names likely were not going to be around without the Fed pivoting. Okay, banks, even banks, they have headaches, right? And we already seen what the Fed did when SIVB went under with that facility, right? That was kind of where they showed their cards in a sense. They showed their hand. But now, even like the banks, even if you think the fundamentals there are going to get worse, the Fed is not going to let it get too much worse, is the way the market's looking at it. Right? So a lot of these areas, the cyclical areas, the small caps, right? They need help, at least a favorable Fed to borrow money and grow. Without that, they struggle. That's why small caps couldn't get out of their own way while the Fed was tightening, right? So all these areas now have come to life because they were priced for worst case scenario. And Powell took that worst case scenario off the table. Now, you can argue he can change his mind, or you can argue it's for now, whatever the case may be. Okay. I think it's kind of a waste of time to do so unless you're trying to look out and forecast, which is nearly impossible here. But for the time being, right, since the Fed meeting, that's kind of the market's interpretation of what's gone on. And what we've seen, again, if you don't want to pay any attention to any of this, right, we kind of have certain signals we look at to let the real money tell us what's going on behind the scenes of the market, and the risk that's been lingering in this market since the bear market started in 2022 has come out of the market, plain and simple. Look, right, credit default swaps. If the Fed is already talking about rates as long as inflation cools, even if the economy doesn't struggle, right? The probability of default on any corporate credit is going to come down. Right? You had, again, if you talk in equities terms, you had a bid here that's lingered since the bear market has started, because if the Fed doesn't come into play, you're likely going to have quite a few defaults out there. Right? And everybody worried about a credit event, stuff like that. So you can see the risk has completely been sucked out of this market. And hence why you've had a rip that just hasn't stopped, right? There's no sellers, basically, is the best way to put it. So that's right now the premise behind the price action and what we're seeing, okay? Now, that doesn't guarantee by no means that this is going to continue for the next year, right? Obviously. But right now, if there's not an uptick in inflation, okay, and there's not some sort of dramatic credit event where all of a sudden it'll show that the Fed is behind the curve because they didn't cut yet, right? They're discussing about possibly cutting, right? The market's pricing in March. You get some real negative shock out there, and the Fed is kind of behind the curve. That will overpower this bullish sentiment that's out there. But without that, this is what you have. Okay, this is what you have. Now, what's the interpretation to us? Like in actionable terms, how do we look at this? Well, you've obviously had the indexes come a long way, right? To state the obvious. There's been one day of pullback and they sucked it up, right? So the indexes have rallied in a straight line. Now, even the laggards have participated here. There's still few out there. There's still some laggards out there, right? That's where a lot of us have been looking mostly. But for the most part, a lot of the stuff that we've been talking about over, I would say, the last month, small caps, that sort of thing, also have seen really strong moves, okay? And I think the most bullish thing, bullish is the wrong way to put it, but I think the best thing about this setup, if you wanted to get long, was twofold, okay? In my opinion anyway. This is the way I see it. If you are in some of these names, right, and you do not want to sell these names, right, you have some cushion, you want to let them run, that sort of thing, but you feel you're a little too heavy here, right? If you do get caught in something eventually, it's going to come. It's just a matter of when. But you have a VIX at new lows, and you have protection right now that's dirt cheap, right? So that's one way to go. If you're holding on to too much weight and you're a little nervous about that situation, you can put on some protection. And even if it doesn't offset the blow completely, right, because you're likely sitting on some profits, will soften the blow at the least, okay? Another thing you can do, and this is kind of the musical chairs theme we've been talking about, is just tactically try to take advantage of the momentum that's out there. Now, granted, the last couple of days, this week, whatever, lower volume after the morning, things get quiet. There's not as much momentum, especially on an intraday basis. But prior to that, okay, there's been momentum all over the place. Okay, we were complaining again, however long it was, a month ago or a month and a half ago, about it was just in the Magnificent Seven, right? Or then just in the large cap names that have already extended and run too far. We needed to see it spill over, right? That was something we needed to see for us to participate on the long side. From that point, we've seen it. We've seen it. You got, heavily shorted small cap names, small caps in general that have been popping all over the yard. Banks have been unbelievable. You have Bitcoin proxy plays that they're basically winning lotto tickets all over the place, right? So we've had all that. And I think now as we get through this week into the new year, it's going to be interesting to see, because I think we see more of what the indexes are doing, right? I think you're going to see the indexes slow down. I think we're likely going to see what we saw a week ago, kind of that quick gut check, where the market all of a sudden reverses and catches, people in weeklies and short-term strikes leaning too aggressively on the long side and wipes them out, right? I think we're going to see more of that, even in bullish conditions. But at the same time, okay, that should equal more of these tactical opportunities, right? Either via we've seen new names started to see action. Like, for example, again, this is a quiet week, and what I'm interested to seeing now that the small caps are alive, I don't know if you guys have noticed, but we're seeing a lot of these small cap names, a lot of more unusual activity out there that's been lacking in this market, that's started to get attention. Okay, you have a lot of stuff that has been ignored for ages. Now, even if the indexes don't even go higher from here, can outperform significantly if the market goes that route, right? Another scenario, and I'm sure a lot of you be pleased with this, you have the Magnificent Seven names, right? Or just let's talk about the large cap and mega cap names, NASDAQ names that have, for the most part, been chopping around. Okay, you have some that are weaker than others, some that are stronger than others, but as a whole, they've underperformed. Okay, if we do see more continuation of this outperformance, we're going to reach a point where, kind of again, that McElliott playbook, where you're going to see rotation back the other way, right? So when this whole small cap cyclical trade gets a little too long in the tooth and they start running out of ideas there, you get, even if it's for a small portion of time, a rotation back into the Nvidia, the Apple, right? And just so you guys get an idea of what I'm talking about here, you have Apple very quietly, right, that has kind of got stuck here, right? And if this continues, right, for another week or two, you can very easily see the money rotate back into Apple, trades to the top end of the range, if not breaches new highs, right? And there's a trading opportunity within that. As you guys are well aware, you've been trading these things like crazy all year, right? So, again, on a short-term basis, right? And this is what we've been talking about. It kind of sounds like I'm talking out of both sides of the mouth, but right now, if you're looking to trade off the momentum and tactically, like a lot of us are, Apple's not the place to be. Nvidia hasn't been the place to be, right? If you're solely concentrating on these large cap, mega cap names, there are a few out there that have some momentum. But in general, these things are underperforming right now, right? The hot money is elsewhere, has gone elsewhere. So when and if we start to see that money come back into this area, that's where you want to get in the middle of these things and try to take advantage and make some money. Right now, you got some people who probably are buying Apple for the last week, right, expecting it to go higher, and they're down on that position on a short-term basis. So trying to get a mental picture of things, you kind of get, like we were talking about, a reshuffling of the deck chairs on the ship, right? Constant reshuffling of the chairs, okay? And while the market's doing that, what we want to try to pay attention to is what's the major theme at play? What's catching the real action behind the scenes, right? Where's the big money positioning potentially as we get into 2024? And that's the main takeaway out of everything here, right? Beyond those tactical trades. That's what we want to see. Because at some point, what's going to happen, right? I'll give you an example. McElliott, right? I keep going back to that because I can see that. I see it right now in front of me, transpiring that way. May not look like that next week, but up and from when he made that call till now, it looks like he's going to be right on the money again with that. And what he's calling for is this to continue, what we're seeing and what we've been seeing, to continue into and probably through January, right? Maybe mid to late January, you start to see rotation back into these large mega cap names. Now, and here's why, okay? And this is the key. And these are some of the things you can look for as far as clues when that may happen. If they decide to rotate back into the Magnificent Seven, it's likely going to be as a defensive play, okay? Meaning that the economic data that we get from now to then is getting worse, right? So players are starting to doubt those cyclical names, right? They've run a decent amount now. Okay, so they start taking profit on some of these cyclicals, some of these small caps, as the economic data possibly starts to slow, right? So that's one of the clues we'll probably see when that rotation starts to happen is, right, you'll start to see some of this economic data miss to the downside, and money start to move into more defensive posturing, right? If the economic data firms up and improves from here, and people automatically discount that. I don't think it's that foregone, conclusion that we're going to slow down. You have financial conditions that have drastically eased here, right? So you may get some better than expected economic data off of that. And if that's the case, you likely see more of these cyclical names, small cap names, that sort of thing continue to do well. They should buy the dips in those names, right? And the Magnificent Seven and those defensive names continue to underperform. So those are kind of to get a timeline on things. Yeah, we don't have the answers to that. So we will see that how that transpires as we go on from here, right? But going back to the McElliott call, he thinks what ends this rally where we actually see a correction, right? A correction, not a crash, not a new bear market, right? Nobody has a clue what pops out to possibly cause that. He's talking about a correction just based off positioning being offside. So think of this. What the hell is that? This, okay? Just what we went through here, right? You had positioning get lopsided here, and you kind of needed to unwind it, right? He thinks what you see, and one of the first signs of that getting close to materializing, is you're going to see players start to crowd in those Magnificent Seven names. So the breadth really starts to thin out in equities, and you start to see those names trade higher with volatility. That vol up, spot up trade, right? Where VIX catches a bid, holds a bid, but you get the NVIDIAs, the Apples of the world still showing strength, while some of the other stuff underperforms. All right. So again, that's his scenario. It's not even a prediction in a sense, but these setups have a tendency of working out that way, and that's what he's looking for. And like I said, I can definitely envision that, especially now that we've seen the rotation spill over into small caps and stuff like that, right? Where they rotate back into the stuff that was crowded, and then they catch them there in a correction, right? So again, well, listen, we don't want to look too far ahead, and I mean, the last couple of years are proof in the pudding why we shouldn't. We don't know what's going to happen. We have no idea what's going to happen. Okay, whether the Fed cuts rates or not, Fed rate cuts could be the worst thing that end up showing up. Okay, because if the Fed starts cutting sooner than everybody expects, everybody's going to wonder, why are they doing that, right? What do they see? They didn't even cut rates, and some people are worrying about that. If they start cutting rates earlier than expected, you're going to have a lot of players get even more gun shy off something like that. So there's no reason to jump the gun and try to handicap that. I think we trade what's in front of us now. And when we do get that pullback, right, that's likely to be the next really solid entry into whatever theme starts to take shape, right? So if it's, let's say, a continuation of what we've been seeing, where cyclicals and small caps take a leadership role and outperform this year, the complete opposite of what we saw this year, that correction, when it unfolds, is going to be the next best entry in a lot of these things, a lot of these names, right? A lot of these sectors. So that's what we have to look forward to into, let's call it the first quarter of 2024. And in the meantime, again, I told you the two ways I'm looking at things. If you're concerned about that correction showing up earlier into the start of next year, right? You think it's January-ish, you really don't want to put too much weight on now up here without some decent protection. It doesn't make sense, right? So if that's the way you feel about things, you want to take that more tactical approach, all right? Trade off the momentum. And this way, you can limit your downside. There's nothing wrong with taking losses. You just don't want to get caught with a basket up here on new entries and, shit hits the fan for a month, right? So that's kind of how you want to look at things. If you think we go into February, March, and you see some decent action and decent pockets of the market that you like that aren't as extended, and you think you have some time, you have some wiggle room, again, you can swing positions with protection. Otherwise, you just look to remain extremely nimble, tactical, and don't worry about the upside you missed on a lot of these things. You just keep the chains moving, right? Again, that musical chair, Steve. You played the Bitcoin miners. They pop in the same day. The next day you got out of them. Okay, they went parabolic the next week. Okay, but that wasn't your approach. Time to look elsewhere, right? Keep making that money and moving on, because nobody looks at the end game of getting caught, right? A lot of those profits are going to disappear the heavier you get caught. So that's what people don't take into consideration. Quickly, here's some of the other stuff. You got credit spreads, right? We look at swaps more than spreads, but same thing with credit spreads. You can see them rolling over. They actually can go even lower here. And that's the only reason I'm even looking at these things right now. Otherwise, there's no reason to pay attention to these things until, one, that correction shows up, or two, there's some event that shocks the market, right? But these things are pretty much, there's no other takeaway from them. And here, there are other things out there which show the market is definitely overextended, but in these liquidity rallies, they really don't matter. Meaning, the market may get tight on the upside, but doesn't mean you're going to get some major selling. Could lead to chop, or could lead to what we've been seeing, just a slowdown of the gains. You get one day of selling, and a couple of days later, they buy that right back up, right? And it kind of softens things up a little bit. But here's one indicator: equity hedging, right? How much players are hedging or taking off hedges. And you can see quite dramatically from where they were that they've been taken off hedges, but there's still room, right? There's still room. And even stuff like stocks over the 200-day moving average that people like to look at in range-bound markets or in corrections, they reach certain points and rallies stop on a dime. But, in liquidity-driven rallies like we're seeing that light up every speculative risk asset across the board, things can definitely overshoot. They can definitely overshoot. So that's what I'm trying to show you here, is that, again, the markets look like they've come a long way, but we've seen them go a lot further than any of us thought they might. Here's hedge fund exposure. I haven't had the Goldman data. They're all on vacation to back it up, but looks like they slingshotted back officially and got long. I mean, we've been seeing kind of that in the market here, but they're not really that long, right? So they're sitting on some light long exposure in single names, but they're still short S&P 500 futures, which is incredible. So again, there's room for further unwind here. There's definitely room for further unwind if the market wants it. Doesn't mean it has to result in upside, right? Parabolic moves in the indexes, but what it means is, like, there's a good possibility we're going to see dips continue to be bought, right? Shallow dips. Let me see. A couple of you guys have questions there. I didn't see. Let me see. Haven't heard you mention move the chains in a long time. Yeah, and to you, obviously, you've heard that. Me use that line from time to time. What it means in simple English, guys, is make some money and move on, right? If you think the market obviously has come a little bit too far, and you're even just worried about getting caught in something, a little worse than what we saw the other day, right? Where you get a real violent shakeout that lasts a day or two. You make your money and you take it off the table. And at the same time, even more importantly, you want to limit that downside, right? You want to make sure you're not holding on to a loser and hoping to get bailed out. Because I got news for you. The worst thing is going to happen. You're going to get bailed out. And that's going to be the worst possible thing that happens to you, because you're going to hold the next loser hoping to get bailed out there, and you're going to lose it all. You know? So that keep the chains analogy just means, right, first down, one first down at a time. And as long as we're seeing the sweeper activity pour into these things and creating momentum, we want to participate, right? We want to participate in some fashion. If we start to see the sweeper activity dry up, or crowd into the same 3 or 4 names, that's telling us that the momentum, the music is starting to slow down. All right. So it's kind of that seatbelt, as I say, the flow a lot of times. If you're not seeing the flow pour into other areas, right, just don't get in the habit of buying the same names over and over again, because that's usually a sign of caution. Right? Usually a sign of caution. And on the flip side, again, a lot of times I don't even mention this, because those of you know me know already how I feel about it. But if you're trying to short this thing, okay, one, you're nuts. Okay. First of all, we talked about in the bear market how you shouldn't short, let alone something like this. But if you are trying to short, okay, just don't get lumped up. Right? Don't get lumped up. There's no reason to. Okay. You're likely not going to catch the big crash when and if it ever comes. All right. So it's not worth it. That one winning trade on the short side, so you can pound your chest, is not worth the agony that you have to go through. Right? And even again, right, you could say, oh, I'm shorting tactically. If the momentum's not there, you don't want to do anything tactically, right? Just the opposite in bear markets. If there's no call sweeper activity, right, I'm not just going to buy, just get into something on the long side and fight the trend, right? So it's the complete opposite of that. It's the complete opposite of that. Once if you start to see the momentum turn, we start to see put sweepers grab the bull, call sweepers start to dry up, and you want to start getting involved in the middle of that momentum on the short side, at least you got a chance. At least you got a chance. But it's a tough game. It's a tough game. As you know, right? You're going to see a lot of people on the short side who've blown up in this cycle. A lot of people. And that's just, I've been in the game too long. I've seen it over and over again. I've seen it for no reason whatsoever. Like, you think of what just happened here. This never ceases to amaze me, this market. Right? Like, you just had right now, we had a little correction there. Nothing fundamentally had really changed, but we got to admit, inflation has cooled. Okay. But even with inflation cooling, the Fed really didn't have any reason to even mention the 2 words cutting rates. No reason to, right? Supposedly they still got QT running in the background, which is complete nonsense, right? Why in the world would they even those 2 words come out of their mouth with the economy actually as resilient as it is? Right? The job market didn't significantly crack yet. There was nothing out there for Powell and Yellen to do what they did. But the election, right? But the election. And that's why a lot of people with tinfoil caps on think no matter how bad it may get, they're going to do whatever they got to do, no matter what they say. I mean, Yellen works for Biden. Let's be honest. Right? And she nailed the bottom. Yellen nailed the lows with that QRA that on that funding day. Nailed the lows. Right? So that really just came out of nowhere in a sense. I lit shorts on fire, and there hasn't really been anything fundamentally that's changed, but liquidity, I mean, think of it like a hose being saturating the whole backdrop here. Right? You got Bitcoin, you got the more speculative stuff that's lit up. The Fed Reserve, the balance sheets have been pushing higher. You have a nice uptick in liquidity here that's been behind this move. All right, so there's no rhyme or reason to that. In other words, what I'm trying to get at is you don't even try to look on new bull market, bear market characteristics. It's a liquidity driven rally. Everything eventually catches fire. Everything, right? Speculative risk assets, everything. And that's kind of, what we're seeing, right? The dollar starts to bleed out. Gold catches a bid. Bitcoin catches a bid. That's what we're seeing. Now, if we see liquidity start to dry up, right? That's a different story. But, what do you guys think now, right? Now, we didn't even think, a lot of us didn't even think, including myself, that it would get to this point. But now that the Fed showed, Powell and Yellen showed their hand, being there's an election year next year, how the hell are they tightening liquidity next year? No, there's no way, right? Anybody think that Yellen and Powell are down to tighten the spigots at some point next year in an election year? Right? With especially Yellen appointed by Biden, there's no fucking way. With Biden down in the polls, no fucking way. I just thought it, honestly, God's honest truth, and I was wrong, but I didn't think it would be as blatant as it was here. I really didn't. Right? Without a catalyst, and especially after what they've told people over and over and over again, there was really a no-win situation to take the approach that they did, unless you're concerned about that election, right? And you can see, that's what the market's been signaling. Right? We talked about it here. We talked about it here, right? Like, the logic was we would stay in this range. And when things got too tight, they would loosen. When things got too loose, they would tighten, right? Wipe out inflation and a lot of the speculative behaviors out there and take it from there. But they hung up the cleats already. They hung up the cleats. Yeah, and now it's a race. It's a race against time in a sense, right? Because what's the risk now on the upside, let's say, right? What's the risk holding back the S&P 500 from just, right, like a QE rally continuing higher? Well, twofold. One, again, it goes back to what a lot of us have been talking about and really haven't seen the ramifications from it yet. But you had the most aggressive tightening cycle, okay, in the history from the Fed, from central banks, all right? We really didn't see major consequences from that, right? Now, inflation has got hit over the head, okay? But the economy really hasn't seen any impact, okay? Is there that lag effect, maybe even more of a lag effect, and we start to see that next year, okay? So one risk would be the economy starts to significantly slow, and the Fed didn't cut rates yet, and then they're behind the curve, kind of like the inflation thing, right? It's transitory, inflation caught fire, and then they had to raise rates aggressively. But we dealt with a year of a bear market, right? So similar to that, where, there could be some credit event. There could be something that blows up based off what the Fed has did in the past, and they're behind the curve. They haven't started to ease yet. So that, I think, is one of the main risks that people have their eyes on, right? And want to see signs of that before pulling the plug on any of this stuff. And the other thing I think is the bigger risk out there is that what we're seeing now, right? The Fed and Yellen, the behavior from them in what they just did lights inflation again, sparks a match again, right? Like, that's the other risk. You have one of these inflationary gauges tick higher, right? The PCE, the CPI, get everybody's attention, get the Fed's attention, and then guess what? It wipes out all of this, right? All of this. because now the Fed can't remain easy, right? Forget about rate cuts. They probably are going to be leaning towards more hawkish and tightening. And you've had a market that priced in a lot of easing here, a lot of easing. That would get really, really ugly. And I think that's right now the main risk, because the economy slowing down, at least you have the Fed, they stopped hiking and they're talking about rate cuts, and you're starting to see some easing get priced in, right? That's already in the process. So even if it results in some sort of correction, it probably more than likely gets bought. If you get a spike in inflation based off all this, they got headaches, right? They got headaches. So, again, these are the things we're battling, but to try to predict them is darn impossible. Impossible. There is nobody out there. I won't say nobody. I'm sure there's a person or two out there, but nobody that thought that what the Fed had done tightening wise, how behind the curve they were, how aggressive they were in tightening and hiking rates, that this is all we were going to see as far as economically. I'm not even talking about equities. All right? Nobody thought that. Everybody had recession as a lock. Probably why it didn't happen, right? But everybody had a recession as a lock. It was just a matter of, was it coming this month, that month? Right? I mean, the Fed rigged the game, and we still didn't get it. So you can't try to handicap this stuff. All right? We kind of want to play what's in front of us. And what's even better is when we do get those shakeouts and pullbacks, right? Those are likely to be opportunities on the long side, at the least in certain pockets and sectors of the market, right? At the least. It's when you have the financial conditions aggressively tightening, credit default swaps aggressively widening out, where you can't find any opportunities. Without that, there's opportunities somewhere on the long side always. So I think that's the good news. And, we've been talking about that, right? The 2022 bear market playbook, no matter what we're in right now, that's been over. That's been over. Right? We may see more rotation. We may see more chop, whatever. But there's going to be opportunity on the long side. And sometimes the flow will be better than others, but there should be buying in certain pockets. All right. So that's the good news. And that's kind of why I'm a little giddy going into 2024. And you guys know, right? The small caps, not even just small caps, but small. I'm a stock picker, right? So what we started to see, I was hoping we saw it, because I think it would have been really bad news going into January if we didn't. We started to see other things get involved. And, you got to listen. There's no way to say, you got to like what you see, right? Whether correction shows up or not, we want a correction, right? We want some sort of pullback or correction, because if what we've been seeing here the last few weeks or month continues off a correction, you're going to have some great opportunities in these small mid-cap names. Great opportunities. Yeah. And the worst thing we can see, okay, no matter what, it may over the short term, you don't notice it, okay, but the worst thing you can see is crowding into the same names continuously. Okay. Again, it can go on longer than we would like and try to turn you into a bull. Okay. But it is the worst thing you can see, especially for what we're looking for, especially if you're a stock picker in a sense. Right. You get forced to chase, and then it's inevitable. They pull the rug, and they pull it hard, and they almost always pull it when you have a bag. Right? Always. It's awful. So now I think it's it's been more of a stock pickers type environment, even with as strong as the rally's been. I mean, look at AMD, right? AMD, one of the stronger names, where NVIDIA is more choppy, right? So not everything gets painted with the same brush, 7 names, they just keep going higher and that's it. There are going to be more opportunities. You just got to keep your eyes open for them. Yeah, and yeah, that's a perfect point. See, right? Tesla, same thing, right? Just hasn't acted right at certain times. It gets tougher in those things. Just gets tougher. All right. Yeah. Other than that, there's nothing really new, right? Everybody that I follow, that I usually get some interesting nuggets to throw at you guys, they're on vacation. They've been away for the past 2 weeks now. So no real changes or nothing really new I have to share with you on that front. Name wise, there's some interesting stuff out there. Let's talk about today first, right? Today, a couple things. A really quiet day. You had Nike. There's some buying off that dip. Nothing major, but I think it was March calls. So some decent buying. All right, so you got a pullback there. Potential, again, cyclical name. You got an entry here. What else did we see? What was the other one that was there? Hold on, I'm drawing blanks. Oh, this guy on the growth side, APP. This has been on that hot growth skin that I've been running, been telling you guys about for a little bit now. This name has been on it for a while, even before I started talking about that scan with you guys. It's been one of the few names, as you guys know. Those in the room know we talked about it a few times. It's been kind of stuck in a range here, and they're buying short-dated Jan calls. So I wouldn't say they're looking for some major breakout. They're only going out to Jan, but they're buying this little pullback. They're buying this little pullback. The fundamentals, they're profitable, decent growth rate. So all the stuff you want to see is there. The one negative that I found on it was you got some insider selling. You know? And that's not always a catastrophic thing. You know the old saying, insiders know when to buy, they sell for a variety of reasons. I don't like when I see flow and see insiders selling. You know, because sometimes what happens is even these insiders, they may be selling stock and buying buying calls, even though I don't think that's the case with the Jans. But you rather not see insider selling, put it that way. So that's the negative on it, on this APP. Another name today, let me think of. Oh, the other names were just strictly quick trades. Billy, China Play, they came after it in the morning. AI, they came after it in the morning. Had some momentum. Not a bad spot on this AI. If you're interested in that name. What else? But as far as notable action, there wasn't a whole lot. VKTX, some of these biotechs have looked good. Did you guys see this biotech that caught some flow in the last couple months? CYTK? Look at that. So there's been quite a few of these over the last couple months. This, I know quite a few of you like this name, right? We've seen some nice action in. A lot of you are rolling in this name, which is the smart thing to do at this point, BBIO. So biotech has been hot. The best looking flow of recent is this guy, CF. This is an ag name, laggard, complete underperformer. Me personally, I think, because usually when they buy the sector, you see some flow in the others. We saw a little bit, but nothing that I would say they're making a play on the sector. I think this is probably an activist play. Again, I don't know anything that you guys don't know. You know what I mean? I don't have inside information. But the type of action that it caught usually is an activist sniffing around. All right? You end up hearing about it a month or two down the line. That's dried up. You remember we used to look for that a lot off flow. And we went through quite a dry period of that. And now we're probably going to start to see some of that stuff heat up, right? Again, barring some exogenous event, which can happen in this fucking crazy world, excuse my French, like that, right? But we should see some a pickup in some of these deals. Some of these looking to go private deals because you got a lot of stuff that's been beaten to shit. And, couple guys like Bravo who like the software names, they're going to come in and try to pick up some cheap names. What do you got there, Shorty? I missed that. NTR, that was the other one that caught a little bit of action. NTR. But again, nothing like this. This had activist type buying written all over it. It was sharp flow. I didn't buy it yet as a swing. As many of you know, I day traded it, caught a nice move intraday. The reason being is what I mentioned to you earlier. This is something with time, right? You're looking to buy with time. Now, there may not be a rush unless you get that activist news headline, right? Then you're screwed if you're not in it. So if you think that's going to happen, you're probably better off buying a piece. But I think everything now from here that you're weighing to swing has to be looked at and measured against some sort of pullback, right? If you buy CF and you get caught in a pullback, is it something you're willing to add to, right? If not, you may want to hold off on it. You may want to hold off on it. And unfortunately, you need to look, I think you need to look at it that way until we see some selling show up in the market. The selling may be nothing. Maybe it just results in chop, right? But we need to see the eyes of the sellers. We need to see what the sellers look like when the buyers get tired to kind of, get a gauge on whether we should be adding stuff already or, call sweepers went back into their hole and chilling out for a little bit. So that again, I don't know if it's a preference thing. For me, that's the way I look at it. And I'm not in a rush. The overall market, again, the indexes don't really, as you guys know, don't mean much. I think even if we don't get much upside on the indexes next year, if we see a continuation, what I'm hoping we see, I think a lot of us stock pickers are going to have a much better year. I didn't even have a good year this year. I underperformed significantly, as you guys know. I mean, I didn't swing anything. Of course I'm going to underperform. But it wasn't really a stock picker's environment for the majority of the year. Right? I mean, again, in that joking way, the majority of you, I get it. But I was getting trolled for going a week or 2 weeks without even day trading some stuff because I wasn't going to buy NVIDIA every day. But obviously, the last few weeks have been completely different, right? I've been really active based off the flow and the different names that are catching action. So if we do get a different type of market next year, more of a stock pickers market with small and mid-cap participation, if you're a stock picker, you're probably going to have a much better year than you had this year. Exactly. Me too, T. Me too. Like the December was it for me. The December was it. All kidding aside. Prior to that, I wasn't, as many of you know, I wasn't doing shit. So I think that once we do get the pullback, there's going to be a lot of information in it, right? Maybe more of a pullback in certain areas and not in others. What I also like that we're seeing is even though the indexes really haven't pulled back, right? They're drifting higher. Under the hood, we'll start to see certain names and sectors digest, right? So what's going to happen is there are going to be other stuff that's going to be in the midst of setting up even before the indexes possibly pull back, right? So that will likely result in, once the market does start to pull back, these names will probably attract buyers a lot earlier than they normally would do, right? Because they've already been digesting gains. So that's also a pretty positive scenario that can transpire. Again, we just need, as long as we're getting the participation, everything, it's fine, right? We got no complaints. What the worst case scenario would be crowding in this market again, because that, again, I think that would be a warning sign. A warning sign. There'll be money be made, especially early on in that crowding, but that's going to be a warning sign to where, there's something with teeth coming at the end of that. What else? Any other names? And like for example, there was some flow. Was this the name? Look at this name. I think one of you guys mentioned this name to me. I remember this name, Shark Ninja. But like we never would look at it, right? This wasn't catching any action or any interest. There was some unusual activity there today. All right. So again, you get a little digestion here, and now all of a sudden catches some more sweeper activity. All right. You got the type of name we all look for. Shark Ninja. Look, profitable. Right? Profitable, nice growth. So this is the stuff we weren't seeing at all this year up until recently. But this caught a little bit of action. Yes, CYTK. Did any of you catch it? I know a few of you liked the name. That was a crazy move. Crazy move. Some big biotech moves. This one too looked good, right? I know a few of you like this name, TGTX. Had a nice rally. There's been some nice move in these biotechs out there. What else? PLTR. Oh yeah, LT likes PLTR. You gotta dip. Now, yeah, I don't know the story. You follow it a lot more closely than I do, LT. Is this selling based off insider selling? Is that the catalyst behind the sellers here? Because honestly, if it is, I don't know. Again, that might be a buying opportunity that you might want to be interested in. All right. I was in before Shark Biotech. Oh, you were, so you know this name then. You're talking about what was the symbol again? I just drew a blank. CYTK. So you owned it, T, and you weren't in it for this, you mean? Yeah, BBIO, I remember. BBIO. Well, that BBIO is nice. That BBIO has been really nice. Twice. Oh, good. Very nice. Very nice. Very nice, T. LT, I like ARM. That's one I'm kicking myself for not owning here. This was a great setup. Like my cup of tea too. You had this thing was catching action, as most of you know. Wait, over here. All right. So you can't get a better setup than that for me. You can't get a better setup. You're catching action there. You know this thing is a monster arm. The semis are red hot. Now again, this I would look for pullbacks. I think you'll get it, or even you might even just get this if there's no selling in it. But yeah, I like this name. I like this name a lot more than your PLTR. I'll say that. I like it a lot more than that. ARM, see, some of you youngsters probably don't even remember ARM. This thing was publicly traded. ARMH. It was an ADR. Then it went private, right? And then now they just brought it public again. It used to be ARMH. It was a monster. This thing's huge. ARM. They're huge. That's a REIT T, A-R-E. A lot of these REITs have had nice real moves, right? Real moves on these REITs. So yeah, there's been a few of them. I think Stacy's asking about these beaten up names. That's an interesting call, Stacy. Here, I tried playing this Pfizer, even just trying to be nimble, and I can't make money in it. It's just this Pfizer. It's just not for me. Some stocks you just have bad experiences with. I cannot make money in this Pfizer. But again, they're laggards, and you could see them continue, no doubt. No doubt. I think, some of these names, like a Pfizer, you got less risk. You can manage your risk a little better there too. You know, for example, if something happens in the market, right? You don't like what you see, you can probably get out of this Pfizer with a little scratched, as opposed to some of these high flyers. Um, they're just, it's, what it is, States, it's not really that exciting. It's not exciting. For me, it's like pulling teeth. Anytime I try to see upside in this thing, it's always like, it feels like pulling teeth. Always pulling teeth. Even like sometimes I feel it's so bullish and I'm barely up on the thing. So I just struggle with this name, um, Pfizer and stuff. What else you guys got going on here? This is another REIT, Mac. Yep, this is another REIT. VNO. One of the good ones flow wise was that. What's that symbol? I can't remember these symbols. SG something, but there were a lot of them. Yeah, Stacy. So you hit the nail on the head, Stacy. That's exactly what I was trying to get out of my mouth. If you're looking for something with less risk, but obviously you understand there's going to be less reward that comes with it, you just want to try to keep your risk tight. That's more probably what you want to see. You said it a lot better than I did. I was trying to think of the other. There's a REIT that caught some put selling and call buying. Has been really nice. But the REITs as a whole, they've been real hot, real hot. SPG, that's a good one. That's not the one I'm thinking of, but this is a real good one. This is like the quality of the bunch, really good. This one too, right? It's considered quality. Vornado used to be. SPG, thank you. That's the one. That's the one. No, not SPG. I'm looking at the same thing. Hold on, I'm drawing blanks. It was one that was littered with put action when these things were hurting. SLG. Thank you. See, that's why I got fused. Thank you, son. That's the one. That's definitely the one. SLG. So this is the one I was thinking of. This is the one. This here, you guys remember Horizon in the room? So many people in the room playing the downside here. This thing was lit up with put action. Lit up. And now we've been, seeing actually put selling and some decent size call buying behind this name. So, and this is a rate cut play. Right? This is a rate cut play. These things were priced for disaster. Right? These were priced for disaster. And honestly, they probably have more upside. It's just an ugly upside, if that makes sense. Right? It's almost the type of upside where you don't even realize it. When you're not looking, you're like, oh shit, this thing's up $5 over the last couple months. That sort of upside. You look at it, you stare at it on a day-to-day basis, and you pull your hair out of your head. But this was a nice move here. This was a nice move. So you have REITs, the Bitcoin miners. I know everybody's talking about them now, but if you wanted to roll the dice, you had some nice. I'm just talking about even lottos. You had some real nice flow there on a couple of those shots. Right. First of all, this, besides the Mara, M-A-R-A, which got tattooed, right? And that always gets tattooed when Bitcoin's hot. But this was one of the first ones we started to see some real buying in. Remember? They were buying 3 months out. It wasn't speculative action. It was like real buying coming in, the CLSK. And this thing's been unbelievable. Then, we started to see the more speculative names, and you're talking about the crap of the crap. Wolf, right? Dollar stock, that's at 3. The IRIN, oh man, the action, that was some good looking action in this IRIN. They're selling puts in this thing. And you know what's funny? I didn't even know this was a Bitcoin stock. I thought it was an energy stock. I thought it was like solar. I thought it was a solar stock. But yeah, real good looking action in this. This is one of the more recent ones, BTBT. Right? They just started buying this over the past week. So you've had, and the Mara has been incredible. This always catches nice action though. Always. I don't know why, but when they're bullish Bitcoin, this thing catches size. And then you got this thing, right? The bombs that have been going off in this MSTR. So Bitcoin's getting real interesting, right? To keep an eye on here because the Bitcoin miners still had juice. And some, from what you guys are telling me, the altcoins, right? The more speculative stuff has been hot of recent. Bitcoin, where is it? Where's the, Bitcoin has kind of been chopping around here, right? And what's interesting is this. And let's see if it's a tell on liquidity again. All right? So let me doll this up for you so you guys can see. Come on. I'll make it nice and bright. All right? So if you look at a weekly, because that's when we get, we're going to get an update on reserves today. I don't know if this is updated. All right? But look at this. I mean, that's pretty sick. No? This is Bitcoin Weekly and Fed Reserves. All right? So you can kind of see how Bitcoin front ran this liquidity move. Broke out. Right? You see it there? And this followed. So now you got Bitcoin hanging out, right? So the interpretation to what liquidity may do here, liquidity may stall here for now, right? And depending on what Bitcoin does from here, could be a nice tell on what transpires with liquidity. And this is not the first time, right? You guys remember this. Where's the SIVB? Oh, I have a weekly up. That's why I can't see it. All right. Like we didn't, that new facility when SIVB went under, nobody knew what the hell was going on. Nobody knew what that was. And then Bitcoin, remember, had a big pop off it. So that was the last time it kind of gave you a heads up on liquidity. And now again here. So March, yep. Yeah, I got confused with the weeklies here. So it's gonna be, that's what I'm keeping an eye on Bitcoin right now. Again, it's really not the miners. The miners, if Bitcoin just hangs out here, the miners will probably remain hot, meaning there'll still be momentum there. It's Bitcoin itself. I basically, I want to see whether if there's a breakdown or breakout from here. Maybe it just chops around here. Maybe it does something like this. Who knows? But it'll be interesting. It'll be interesting. Mara 21 call sweeps. Yeah, the Mara, there was home runs, man. Home runs. Absolute home runs in that Mara. This thing is liquid too when it gets hot. It's the real deal. You're talking about like $500,000, $1 million sweeps, catches big size. And then the coin, right? I know a lot of you like that coin. You want to see, again, it moved, but if Bitcoin, you think like Bitcoin is going higher from here, I think this probably has another leg higher. This Robinhood piece of garbage. So this is kind of a hidden play on Bitcoin and retail. All right. So you guys, have you seen retail recently? I have it on my regular Twitter, I think. Hold on. This is what retail looks like. Oh yeah, look at that. So you got yeah, retail has definitely jumped in the pool here. Definitely has jumped in the pool. And listen, they're going to catch them. You know they always do. Listen, retail. I, again, I don't mean this personally to anybody out there in particular, okay, but just as a whole. Like even when like retail is looking to make the smart move or has time to get out unscathed, they still find a way to botch it, right? They'll hang on to like AMC and come up with the huddle uh, cash handle, right? Like stupid shit like that. Never fails, right? Huddle. You have to huddle AMC. Like, wait, you're looking to blow yourself up? So they'll get them. They always do. And this is what the Fed has done. Zero hedge has been all over this. Okay. Listen to this. This bugs you out. This has been the biggest 2 month easing in financial conditions history, surpassing the announcements of QE1, QE2, QE3, and the rest of the boys. Okay? Think about that for a second. What Powell and Yellen did here. Think about that. Okay? And here's the funniest thing in the world. If you remember, we had this discussion. Out of Powell's mouth, okay, everybody was calling for a rate hike. And if you remember on this webinar, we talked about they're not going to hike rates because financial conditions did it for them, right? Financial conditions were tightening. They don't need to hike rates. Okay. So Powell came out and said that. He said, we don't need to hike rates because the market did it for us. Financial conditions have tightened. Right? That's kind of why he didn't need to do anything. That was the explanation for not doing anything. And what he did here not only unwound all of that, I mean, look at it. You're talking about a complete flip flop. Complete flip flop. Right. Yeah. Higher for longer. That was another thing. What happened to that? Right? It's amazing, man. It's amazing. And you hear these things, right? The Fed is not political, or Powell's Volcker, he's different. There's no such thing. There's always politics in it. Always. Right? Always. There's always, and even if it's not Powell specifically, right? So like Yellen, there's going to be politics, just like with Mnuchin for Trump. There's politics involved. They do not want to be pointed at for the reason why they lost an election. No way, Jose. But this is crazy. That's how aggressive. Look, biggest 2 month easing on record to 5.5 rate cuts being priced in. That's crazy. That's crazy. Like, for me, and the reason why I think it was such a surprise to me was that's a dangerous, that's a roll of the dice for Powell. You know how bad he can look if it backfires? He can look really, really bad. Now, the other side of that argument, and this is why I don't like to bash Powell or anybody, because again, I don't know the details like everybody on Twitter thinks they do. Maybe they're really, really concerned that shit's going to slow down. And they want to start, because inflation has eased, they really want to get ahead of the curve. They don't want to wait till it's too late. I'll give you an example. That's Ackman's call. Okay? That's Ackman's call. Basically, Ackman's call is they need to start cutting now. And if they don't cut by February, March of early next year, shit's going to hit the fan. That's Ackman's call. Like, he thinks things are gonna get that bad by that point, right? So that was Ackman's bet. Now the market helped him here already without even the rate cuts per se, because the market's pricing that in. But that was Ackman's call. So I'm not saying I know more than Powell, but boy, if it, it not even backfired, just tying it to politics makes him look bad. Yeah. I know. I know. That's exactly it. It's like a drug. That's exactly it. Yeah. Used to zero rates. It's just bunch of CRE loans, business loans coming up. Yeah, and you got a whole. That's another point, right? You got a lot of stuff coming up this year. Um, so get ahead of that curve. We'll see. All right. Again, that's what makes it so difficult to try to handicap, guys. You know, difficult to try to handicap. You try to trade what's in front of you. Again, some of the moves you're going to participate more. You'll be able to catch them early on. The buying will show up in the names you wanted them to, right? Like for example, if you solely play the indexes and the larger names, okay, the first 3/4 of this move out of the correction was right up your alley. Right up your alley. Right? People playing the Nvidia all the way up, or playing the Tesla, whatever name was kept. Oh, Facebook, Meta, whatever they're called, right? Or even just buying the indexes every day, playing the indexes. That's okay. If you remember, Lucci, Ronchero, a lot of people in the room were doing that every day. Doing it every day for what? It felt like a year, but it was like what? At least a month and a half, a month straight. All right. And then to T's point, if you're more of an under the hood stock picker, look for squeeze names, laggards type player, the month of December has been a much better environment for you and tougher for the crowd I was just referring to. So it's this, you can't control that. But right now you try to trade what's in front of you. Some you're going to catch better than others. You can't get frustrated. And like T and I were saying, keep moving the chains. Keep moving the chains. But I like where some of your heads are at, right? Like Stacy, first thing she's concerned about the risk. She's not even talking about the reward. Right? She even caught me. Like I'm a big proponent of it, and I was talking about the reward, and she pointed out, I'm not concerned about that. I'm more concerned about the risk, and that's the right way to look at things right now. Yeah, that you're 100% right, Stacey. You're 100% right. I mean, listen, off of COVID, off the 2009 bottom, if you got tied up into the economy, instead of trading what was in front of you, you missed a lot of upside. And God forbid you were shorted. Right? I mean, we were coming out of COVID, we were in full-fledged global lockdown, businesses shut down, and equities were ripping. So you're 100% right. You're 100% right. That's why you got to, a lot of that is noise, when it comes to playing this game. It's interesting, but you can't let it influence you too much. You can't let it influence you. So that's the story, guys. Again, I don't want to keep you guys all night. Usually I run my mouth all day long. I want to wish everybody a happy and, more importantly, healthy new year. That's all that matters. Okay? I know it's a line I use joking around, but trust me when I say it's only money, right? Wins, losses, you can recover from losses. Happy and healthy new year, right? Put a smile on your face, knock on wood, good health. All the rest of that shit will come. Don't even stress it, right? But I appreciate you guys stopping by on Thursdays, every Thursday throughout the year. I look forward to 2024, talking shop with you guys and the rest of you in the steam room and all. All right? Stay safe out there. And I'll talk to you guys soon. I'll be around tomorrow for steam room members. I'm around, so I'll be there. All right. Good luck, everybody. Enjoy the new year.